Welcome back. You're watching Big Deal, and we are in conversation with Sean Salata, who's heads Bearing Asia. So, Sean, we were discussing various sectors. Healthcare is something that your firm is very bullish on. Now, financial services, that's another very important area where, Bearing Asia has been seen aggressively bidding and even engaging in a fighting war with other bidders for some of the assets here. You have presence in a bank, you have presence in other forms of financial services, and HDFC Credila was your latest investment. How do you see this particular space, and which pocket of financial services attracts you most right now?
Yes, well, financial services as a category is interesting because if you look at the overall growth in the sector, it's something like 20% annual growth in credit disbursements, sanctions in India overall. So it's really a macro play on the overall growth of the economy, of businesses, and the demand for credit. We've also seen improvements in the credit outlook and in the bankruptcy code, and also just generally in the balance sheets of the banks and the entire financial system. I think that looking at the NBFC segment in particular, something like the HDFC Credila investment, that was really a very unique opportunity to buy a blue chip asset from probably the bluest of blue chip vendors in India, being the HDFC Group, which was due to regulatory reasons in a position where they were looking to dispose of an asset that normally wouldn't become available to a foreign investor in a full control position like that. So we thought it was a unique opportunity from a really high quality promoter owner of the asset in a subsector that's a very niche subsegment of the market, which is education loans. So the company provides loans to students that are going abroad for their education. That's their market strategy, and that's where they're strongest. And that segment of the market is really booming as more and more Indians want to go overseas to get their education and are financing that education. So we're really helping so many students achieve their dream of getting a foreign degree and doing it in a way that's very much suited to that category, those cohorts of borrowers that are looking for specific services like that. So we just feel that company has tremendous growth opportunities ahead of it. And I think generally, one of the things I would say about private equity investing at the moment, not just in India, but globally, and particularly in India, because given the positive backdrop, is that it is a very competitive landscape. And so there is a lot of interest in these assets and in these businesses. And I think for us, we really focus on what we can do with the business after we buy the business. And so we're buyout investors, we buy controlling stakes in businesses. We then work with the management teams and the founders of those businesses to continue to grow the businesses and to expand those businesses even further. Because that's really how we're making our returns, is through growth, through further growth. It's not by buying them cheaply or buying them, at a discount. That's really difficult to do, and that's not our strategy. Our strategy really is to buy at market price at fair value, but then really invest in the businesses and transform those businesses through digitalization, through greater market penetration, whatever the strategy is, to help those companies achieve their full potential.
That's right. You have been a buyout investor and in almost all the sectors. So is that trend really going to continue, Sean? And you did mention manufacturing, but other sectors, if I have to ask you to pick amongst tech, financial services or healthcare, which one will you, put your bet more on?
Well, I think the buyout strategy is definitely very, very interesting. And, in the US and in Europe, buyout strategies, it's a mature business. It's a mature industry that's very well trodden. In India, it's a relatively new approach to investing.
Yes.
And it's really, I think, building momentum because it's sort of a historical time now where, if you look back into the mid-90s when India really opened up and there was a lot of entrepreneurial activity, take the tech services, the IT services industry, that really started with the Y2K industry. I don't know if many of your viewers would even know what that means, but it was around the year 2000 when there was all this work being done as an outsourcing product service business for Y2K. And so a lot of companies were founded then. And as we get 25, 30 years into it now. A lot of the founders who were in their 30s then are now in their 60s. And so you have this kind of natural succession that's happening in many of these companies, and growth is probably slowing as well to some extent. And as that industry matures and founders become, getting to the age of retirement, some of them will continue to pass on the business to their family members or to others, but many of them are looking for a succession plan. And so I think there is an increasing amount of buyout activity that's happening and consolidation that's happening in the sector, and that's going to continue. Same thing with other areas like healthcare, financial services. Many of these companies are at the point where the founders are now nearing the age where they're looking for succession planning and thinking about what they do next. And so that's where private equity can be part of the solution, and really continuing to grow the business and put it into a new ownership structure where the employees and other stakeholders can continue to thrive as part of a business that's now under new ownership. And so that's very much part of our strategy, and that is the main part of our strategy. And we think that there's a lot of opportunities to continue to do that.
Lots of opportunities there, but one investment that you made, that's in RBL Bank. Of course, you're not allowed to go above 10% stake. What is your strategy going to be in that? Because there is a lot of action when it comes to the equity play at RBL Bank.
Yeah, well, again, as a public company, I won't make any comments about it that are not public information. But what I would just say is that was a specific opportunity that we had to invest at a time when the bank was looking to raise more capital. We felt it was a good investment, good value. It was sort of around the COVID period, as I recall. So there was a lot of uncertainty in the market, and we kind of came in and helped the bank improve its balance sheet and really bolster its financial position. And it's a play, as I said earlier, a macro play on the entire growth of the credit sector in India, which we continue to view positively, growing at around 20% overall. And this is a very well-managed bank with a great CEO, and we think it will continue to participate in the growth of the sector.
In the sector, and you continue to be also optimistic about RBL Bank going forward as well, to hold on to your position.
We're very optimistic about RBL Bank. I think they just recently announced their results and were very positively received, and the bank is performing well.
That's right. And on the other hand, when we talk about the tech sector, Sean, this has gone through a huge amount of change. The IT services are giving mixed kind of guidance. Some of them are not being able to cope with the present market scenario. While the digital boys, the new ones, are also giving huge amount of competition, and on the other hand they have seen their own boom and bust cycle already. How do you view the technology space, and which are the pockets which you think are still attractive for investment here?
Well, if you look at the IT services industry, which India is uniquely positioned in, given its large talent pool that it has for the global STEM talent base that it has, a science, technology, engineering pool that it has, it has gone through various stages of evolution. When it started in the 1990s, as I said, it was very much an outsourcing business of just low-end support work for applications development and support, and Y2K type of outsourcing. We then had a massive boost in demand that came with the cloud and the move to digital. And that kind of adoption drove the growth over the last, say, 15 years that was really accelerating as we moved to software as a service, as we moved to digital-first business models around the world. Huge spend and huge demand for the kinds of services that many of the Indian IT services companies can provide. Then now we're entering a new phase, which is, I believe, will be driven by AI. And many people are looking at this as well. And on the one hand, there are threats posed by AI, which is potentially a deflationary force that will increase automation and reduce demand for outsourcing. But on the other hand, there's many, many more opportunities, we believe, for companies to adopt AI into their existing estate of applications that they own. And how do you incorporate AI into those, and how do you integrate it? And that's a job that Indian tech services companies are very well placed to deliver on. And that's a multi-year, that's a sort of decade-long runway probably spend. If you talk to global companies now, what are they spending on in technology? It's things like AI. And they're continuing to spend on traditional tech spend in areas like cloud and digital first business,
Right.
user interface and so on. So I think, yes, if your time frame is what's going to happen over the next 3 to 6 months, I don't know. And I think there could be a bit of a slowdown as the global macro picture is still a little unclear. But if your time frame is 5 years or 10 years, I believe very strongly that there will continue to be significant spend on the tech services type solutions that Indian companies can provide. And so we're very, very bullish on tech services sector and continue to invest heavily in that sector. And we'll continue to look for new investment opportunities there.
All right, Sean. That was a lot of deep dive and perspective into various sectors of choice for Bearing Asia to really invest in India. Thanks so much for all your views and thanks for joining us right here on CNBC-TV18. So that was the take coming in from Sean Salata of Bearing Asia on their future investments. They're extremely positive and even looking at new areas like manufacturing for their future investments in the country besides the already existing sectors. With that, it's a wrap on this edition of Big Deal. Thanks so much for tuning in.